Okay, hello and welcome everyone. This is Jeff here with FX Mindshift, and today I'm going to be doing a continuation video on trading the market maker cycle. Okay, so today I'm going to be doing a video talking about trade setups and entry triggers. Okay, so if you guys haven't watched my part one video on the introduction to the market maker cycle, I suggest that you do that. Watch the first video first before watching this one because there's going to be some terminology and things that I talk about here that you might not understand unless you watch that video first. Okay, so I suggest that you guys do that. All right, so today we're going to talk about trade setups and entry triggers. Okay, so what we do is, recapping from last video, we identify the market maker cycle to determine your directional bias, and we're going to do that on the H1 chart. So once you've identified where you are in the cycle, you'll be able to determine which way you should be going, right? Buying or selling based on that. And then what you're going to do is drop down to the lower time frames, preferably the M15, to look for your pattern and your setup. Okay. Then what you're going to do is you're going to identify your entry triggers. Okay, this will be candlestick patterns. You're going to use the moving averages, and also you're going to use the TDI for confirmation. So this is what I'm going to be covering a little bit more in depth today. I didn't really cover that in the first video, so that's what we'll be covering. I'm also going to be talking about how to manage your trade as well, right? Where to put your stop loss, your take profit, and then when to exit the trade early if you need to, right? Because sometimes the trade will go against you, and then you're wondering, oh, should I stay in or should I get out, right? So I'm going to tell you how to kind of handle that as well. All right. So also I want to talk about indicators. There's some indicators on the chart that I use that you guys are seeing. So the first one obviously is going to be the exponential moving averages, which are the EMAs. These are pretty important. This will help you determine the trend. It'll help you with your entries, with your exits. These are points of take profits are oftentimes at the EMAs. So these are important. So I use the 5, I use the 13, the 50, the 200, and the 800. Okay, and the ones that I use the most by far are going to be the 3 in the center there, the 13, the 50, and the 200. And you're going to also see that the 13 plays in a very important role in trade management. Okay, so I'm going to go over that. Traders Dynamic Index, the TDI. This is also a very important indicator. Basically, this is I could really do a whole video just on the averages, the moving averages, and the TDI. But I'm not going to go over it in too much detail today. I'm just going to tell you what to look for on the TDI to show you where you should be entering your trades. Okay. Another one is the average daily range. Basically, what this does is kind of give you the daily range for the pair, specific pair that you have it on. It'll also mark the high and the low average daily range points for that pair. And that's important to note because those are the points generally where reversals will often happen. Okay, so those are good to have. Also, the daily high and low indicator, which gives me the previous day's high and low, because what the market makers will do sometimes they'll come back to a certain level to induce traders to go, breakout traders to take buys or sells at that point, and then they'll rip it back away from them and take it away and get them in drawdown. So that's also a good indicator to have. And then also crossover arrows, which tells me when certain EMAs are crossing over, which is good for determining trend change and things like that. The one I use it for is the EMAs I use it for is for the 13 and the 50 when those cross over. But you'll see that on the chart. I'll show that to you when you see the live chart. Okay. And also the template itself, obviously, has the session boxes drawn out for me. The Asian session, certain boxes, the shadow boxes that tells me, when the sessions are starting and what to look for, or I should be looking for a setup, in those boxes and things like that. So those are the things that help me to determine the trade setups and the entries. Okay. So we're going to look at some candlestick patterns, which are your entry triggers. Okay, so when we talk about candlestick patterns, these are the ones that I'm really going to be focusing on. Okay, I know that some of you are traders and have been trading for a while, so I know you guys know a lot more candlestick patterns than these. But these are the ones that we're really going to be focusing on because these are generally the ones we look for when we take an entry. Okay, so we have railroad tracks, which basically just looks like as it is. It's just two bars next to each other, one green, one red, usually denotes a reversal incoming. Then we have something called a cord of wood, which is just like two sets of railroad tracks side by side. Okay, then we have the two star patterns, evening star and morning star. Evening star would denote a sell coming in, and a morning star pattern would denote a bullish or a buying reversal coming. Okay, and then just simply a shift candle, right? Because you know, a lot of times, oftentimes, when we see the market maker shift out of that zone, you know, it's usually game over at that point, right? So we look for a shift candle. It's going to be about 10 pips generally, and that's just an approximation, but it could be more or less. But generally, you want to look for a shift candle that's about 10 pips or more, because that will really tell you that the market makers have left that area, and you know, want to just get people you know, in trouble, right? So once they shift out of that area and take off, then you know you're good. Okay, so just variations of the pattern, a little bit of recap from the last video. We have three types of you know, the pattern. And the first one obviously is going to be the one where it breaks out of the Asian box, hits the stop hunts high, and then reverses low on the second leg of the M right there. Okay, a type 2 pattern would be the same thing, basically, just you know, a shift out of the box, but it's not really out of the box, it's just at the top of the box, right? To the top of the range, second leg, shift down there. And then the type 3 trade would be a shift down from the middle of the box, okay? And then obviously, conversely, there's going to be the buys that correspond to each of those types as well. All right, so what we're going to do is we're going to be going into some trade setups that I posted into the Telegram group. And if you guys aren't members of the Telegram group, please do so. It's free. Feel free to join. It's in the description, the link. And I do post videos and setups in there, as long as I will be posting you know, trade setups every week, just like this. And I'll just be going over some stuff for you guys, you know, just like this video. Okay, so I posted some setups in there, some trades that that happened on Monday. Okay, and we'll take a look at one right now. So like this is GU, all right, and you can see here this is a type 1 buy. Okay, example. So there were a lot of these type 1s and also type 2s that played out on Monday in the GBP pairs, the crosses, and also the Euro pair crosses. Okay, so we're going to go over a lot of those today in this video. And I'm just going to go over right now, you know, how to, you know, when you see the setup happening and when you see the setup like this forming, how to take it, and, you know, what are your entry triggers, right? So starting with the Asian box, you can see here that we have the first move out of the Asian box, the false move out of the Asian box, inducing traders to go short at this point, right, and triggering sells, okay? And then what they do is they create the first leg here, hit the low of the day at this point, okay? And that's where I draw my first, I draw a box here, okay, to denote the low of the day. And then I watch this area at that point going forward. Okay, so you can see here they induce sellers at this point. They take it away from them, okay? Come back up here and then come back down a second time. Okay, so that's what the market makers will do, is they'll induce in the first leg, they'll pull it back, and then they'll come back down, right, to induce more sellers. Because what they'll do is they'll come back up, they'll hit these stops, whoever was, you know, taking shorts, you know, they'll hit these stops, and then they'll come back down again, right? Because they'll trick these people into thinking that it's continuing, it's a pullback, and they're continuing down. But you can see here what they do is they'll come back down to the low, but they won't actually come back to the low, or they won't break it, right? So that's a clue that this is going to be, you know, the second leg. And also another clue you can see here is that we have one of our candlestick patterns here, which is the railroad tracks. Okay, this usually denotes reversal. You actually can see one of the candlestick patterns here, also morning star. Okay, this was on the first leg. Okay, then they come back down a second time. They come back down to the low. They don't actually take out the low. Give you a set of railroad tracks. Okay, and then now you're looking for your entry. Okay, what I look for in a second leg entry is I'll look for it to close above the 13 EMA, which is this red line here. Okay, so these are the EMAs. The red is the 13. The aqua here is the 50. The white one here is the 200, and then this blue one here is the 800. Okay, so what I look for is I'll look for it to cross above the 13 EMA, and that's when I'll take my entry. So you can see here it kind of went up, it just touched it, but it didn't actually close above. So what they did is they came back down a third time, right? Which means that they wanted to induce a little bit more traders to go short, collect some more contracts because they probably didn't hit their quota, right? And they needed more contracts to go short. So what they did is they came back up and then they came down again a third time. When you see the market maker hit the low 3 times and don't take it out, you know that the reversal is coming. It's going, you know, it was one big reversal right here, one big shift candle, which is our third candlestick pattern in this setup. Okay, so we have 1, 2, 3 of our patterns that we're looking for. We have a close above the 13 EMA. Okay, it does not take out the low of the day, and it's actually the third leg. Okay, and or the second leg of the second leg. Okay. So those are all good signs. It closes above the 13. This would be your entry to take the trade. Okay. You're also looking for TDI confirmation. Remember, I said that, right? So this is your TDI, all right? And you can see here that there's a W that's formed on the TDI, okay? And this is the third leg of that W, or there's a first leg, and this could be all this part here could just be the second leg, but there's a second leg of a second leg, right? So what you're looking for is when this shift candle closes, you want this RSI line, this black RSI line, to be crossing above the red signal line and also above the market baseline. Okay, this market baseline will tell you whether the trend is going long or short. Okay, if it's above the market baseline, then you're in an uptrend. If you're below the market baseline, then you're in a downtrend. Okay, so you want the RSI to be above the market baseline and cross over the red signal line, right? That's when you have all these things coming together, all these confluences coming together. You can take your trade right here. Okay, and your stop loss would go right below the low of the day. Okay, about 5 or 7 pips below the low of the day, just out of the reach of the market maker. Because you know sometimes they do come down, you know, just to the low, so you don't want to put it right at the low, but you want to put it right below it, okay, just in case that they do come down and take it out. Because if they do take it out, then that's a good indication that they might continue down, right? But you can see that they did not, okay, and that they came down 3 times, right? So you can, if you put your stop loss down here, you can see that it would have never even came close to hitting, and you would have been an instant profit, 0 drawdown, and if you held it up to here at this point, you would have got 35 pips on this trade, okay? So that's how you would tackle that setup, right? And so we're going to recap one more time, okay, our entry rules, just so that you're aware. Okay, so we're looking for the second leg of the M or the W at or near the high of the day or the low of the day. Okay, that's what HOD, LOD are. All right, we're also looking for a candlestick pattern, some kind of pattern like a railroad track, morning star, evening star, cord of wood. All right, that's also another entry trigger. All right, we're also going to look for a close above or below the 13 EMA, okay, on the second leg. And then we're also going to look for a TDI confirmation, okay, which means the RSI has to cross above the signal line and also above or below the market baseline, okay. Managing your trade, okay, trade management. So you're looking to take anywhere from 30 to 50 pips on your trades, okay. I mean, you can go for more, and you'll see in the next couple of slides in the next setups that you can certainly get much more than that, okay. But generally, to be safe, you know, just take 30 to 50 pips on your trades, and that's really all you need, okay. I'll even show you like taking 30 pips, you know, one trade setup for 30 pips every day. At the end of this presentation, I'll show you a little table. I mean, that's really all you need to make a decent amount of income from this, okay. So just look to take anywhere from 30 to 50 pips on your trades. If you're consistent with that, I mean, you'll grow your account like crazy, okay. Your SL goes 5 to 10 pips below your perceived high or low of the day, okay. And then your risk reward ratio should always be 1 to 1 or better, all right. I mean, this is a big one for me because if your risk reward ratio is less than 1 to 1, then you're basically doing more work than you need to, because every trade that you win, you're gonna have to work double hard if you take a loss, right? If you take a loss, you're gonna have to, like, say your risk reward ratio was, you know, was less than 1 to 1. That means that you need to win more trades than you're losing, right? And that would be bad. So if your risk reward ratio is 1 to 1, at least you're always getting at least a 1 to 1 trade off, and you don't have to, you know, work as hard. So it's best to have 2 to 1 or 3 to 1, and you can see that when we have the way that we have these setups, you're going to get usually going to get 2 to 1 or better. Okay, so watch how the price handles the 13 EMA. Okay, if there is a close above or below against your intended direction, you can exit the trade. All right, what do I mean by that? So let's look at another example, okay, of GJ. Okay, so this is GJ, and this was also on Monday. This was another type 1 pair example, okay? And you can see here we have our Asian box, all right? We have our break out of the Asian box down to the low of the day, okay? This is your first leg move, all right? And I've drawn the box here to denote the low of the day, and that's the level that I watch, okay? So here's the first leg forming. They come down, induce the sellers to take the the short here. They rip it back up, right? Hit the stops, come back down a second time, induce more sellers to come down. Look at me, we're taking sells. The trend is short. Let's go take a short. But then they come back up again, all right? And they did the same thing, almost the same thing in GU, right? They came back down a third time, all right? So now, what are we looking for here? All right, so we have a second leg of a second leg again. We have our TDI closing above the market baseline and also above the red signal line. We have a big shift candle right here, okay? And then we have a close above the 13 EMA. So this is where we're going to take our entry, right? Take our entry here. Stop loss goes right below the low of the day, okay? And then if you roll that up to the top here, you would have got 40 pips. All right, so I mentioned trade management, right? When you get to this point, if you're in this trade and you're holding and you got to this point and you're thinking, oh, it's great, I got 40 pips, but now it's starting to come against you, right? It's starting to reverse. And this is usually the point where people start to get scared and they think, oh no, what's happening? Is this going against me now? Am I out of the trade? Am I losing it? Okay. So a general rule that I have, okay, is I watch how the price handles the 13 EMA. All right. If you see the price close below the 13 EMA, you can generally kill the trade at that point, okay? Because it's probably going to be reversing down at that point against you. So if you got in here and you saw that the price closed below the 13 EMA here, you exit the trade. You still made a little profit, right? If this was 40 pips, you made about 20. Okay, so that's still not bad. You didn't get the 40, but you still made 20. Now, if you set a take profit of 30 pips, then you would have hit that easily, right? And you would just got your 30 pips and be done with the trade. So that's what I'm saying is that you don't have to go for huge pips because sometimes it'll reverse against you and then you won't make your pips that you had, right? So I just generally set a target of around 30 to 50 pips, and then if I hit that, I'm happy with the trade and I'm on to the next setup. Okay, that's really all you need. Okay, so watch how it handles the 13 EMA. If it closes below the 13 EMA, you can exit the trade. You can see here it continues down, and you would have actually gotten, if you set even if you set your trade at break even, you probably would have gotten taken out right here. Okay. Now, interestingly enough, the trade actually does reverse from this point and go, way up here. But okay, we're only looking at what we are at the time. You can also re-enter. Okay, at this point, if you see it close back above the 13, there's also entry rules for that, for re-entering the trade. Okay, but that's for another video. I'll talk about that on a different video. But so we're talking about these setups here today. All right, so does that make sense, guys? All right, so next, let's go to another example. All right, so this is GC, okay, GBP CAD. This is a type 2 setup, okay? So you can see our picture here. We have our Asian box, right, our range. Break out of the box down to the bottom of the range. First leg formed. Okay, this is your low of the day right here. All right, railroad tracks on the first leg. All right, come back up and then reinduce down for the second leg. Takes out the low, but not by much. Right, you just have a little wick here. Right, so this is still the low of the day right here. Right, and then what you have is your second leg formed right at this point. All right, then we have a shift candle close above the 13 EMA. All right, look at your TDI. You got a W on the TDI. You have your RSI line closing above the signal line, above the market baseline. Take your trade. Okay, there's your entry. All right, you enter your trade there. Your stop loss goes right below the low of the day. Okay, and you can see here, once again, another zero drawdown trade, instant profit. Okay, and if you held all the way up to this point up here, you would have got 75 pips. Okay. Now watch the trade management. Okay. So see, this is what I mean is watch the 13 EMA, because this will save you from exiting out of the trade too early, right? Once you got up to this point, you saw the trade reversing, you probably got scared and you panicked, right? You're like, oh no, this trade is going against me. But you can see here, it never ever touched, or sorry, crossed below the 13 EMA. And once it reached here, it bounced off the 13 EMA and it went, it continued back up, and you would have got 75 pips, as opposed to here, which you probably would have only got like 40. Okay, so you got, if you held it up to this point here, and then you got 75 pips. If you came back down here and let the trade run and close it here, when it closed below the 13 EMA, you would have got, from here to here, I think it was around 30-ish so pips. Okay, up to here was about 40, down here was about 30. So you still would have made your 30 pip target if you set it, here, and then also if you let the trade run and let it close, you would have got 30 here. But if you were able to hold and get it up here at the top, you would have 75 pips, and you had a good day. Okay, so let's go to the next one. All right, so this is GA, GBP odd. Okay, and you can see here we have another type 2 pattern setup. Okay, so here's your Asian box. All right, break out of the Asian box, fast move, induce traders to go short. Right, first leg, sell. Here's the low of the day. Right, here's our box, low of the day. And then we have our close above, and then this is our second leg, right? It comes down to right about here, taps it, does not reach the low, doesn't take it out, right? Comes back up and closes above the 13 EMA, okay? So once it closes above the 13 EMA, we're looking at the TDI, all right? Do we have a close above the, we have a close above the signal line, and then we're right on the market baseline, okay? So if you didn't take it on this candle here, you could have waited for the next candle, okay, which is an obvious close above 13 and also above the market baseline. So at this point, so either one of these candles would have been fine. This was probably a little bit more aggressive entry because it could have come back down, but this one was a good entry as well. All right, so if you took that trade, you held it all the way up to the top here, you would have got 100 pips. Okay, up here would have been like 120. But if you got it up to here, you would have got 100 pips. All right, and you can see here it held the 13 EMA beautifully, never even came close. Okay, here it touched. Okay, give you a nice wick, but it came right back up. Right, and up here would have been 120. It wasn't until you got to here where you closed below the 13 EMA, and at this point you still would have made about 80 pips or 90 pips, something like that. Okay, so this was a beautiful type 2 trade, right, on GBP odd. Now GBP odd is one of those trades where one of those pairs where it can go when it goes, and it makes it has a very large range, but it can also get you in trouble because once you're when you're in a trend, you're trying to find the points of reversal. You can get stuck because it likes to keep extending sometimes. So make sure that you follow the exit rules very closely. If you ever see a close against, close above or below the 13 EMA against your direction, it's a good time to get out. Okay, so that was GA. All right, and then now we're going to go on to the Euro pairs. Okay, so the Euro pairs also did some very nice Type 1 and Type 2 setups, and we can look at EU as one of a Type 2 example that we had on Monday. So here's our Asian box one more time. Okay, we have our break out of the box to the low of the day to create the first leg. Okay, then we came back up, it went back down to induce more sellers to short, didn't come close to the low of the day here, and formed the second leg. You can see our railroad tracks right here. Okay, then it went down again, hit it a third time, right? So EU hit it the third time. Then we had to close back above the 13 EMA here, all right? And that was where your entry, you look at your TDI, close above the signal line, above the market baseline, you're good to go, right? There's your trade entry. Stop loss goes right below the low of day here. And again, zero drawdown trade, instant profit. If you wrote it all the way up to here, you would have got 50 pips, okay? Following the 13 EMA line, you can see here, this actually never closed below, right? Just kind of held the 13 EMA all the way up to here. And this would have been about 60 or 65 pips. But then if you got to close here below the 13, you would have still made your 50 pips, okay? So that was a nice trade on EU. All right, next we have EJ, all right? This is also a type 2 example. So we have our Asian box, all right? Here's our fast move out of the box. Stop hunt creates the first leg. Here's the low of the day, all right? Set your low of the day down here. Watch this area, right? So it closes above the 13 here, then it closes back down below, forms the second leg right here, railroad tracks right at this point, okay? Comes back down for a third hit, and here's your shift candle, close above the 13, entry is right here. Watch the TDI, close above the signal line and way above the market baseline, so you're good to go. All right, so this trade here, stop loss goes below the low of the day, and this trade would have netted you 60 pips had you held to the top. All right, so that's EJ. Next, we have EuroCAD. Okay, this was also another beautiful trade, type 2 setup. All right, Asian box setup, here we go. Out of the box, down, railroad tracks first leg. Okay, there's the low of the day right here set. Okay, so you set your low of the day, watching this area, close back down below the 13, and then back up above again, railroad tracks again, okay, to form the second leg right here. So your close above the 13 here was your entry, your TDI, above the market baseline, above the signal line, okay, so you're good to go. You take your entry there. Stop loss goes below the low of the day, and again, you had minor drawdown, maybe like, I don't know, 5 pip drawdown before shooting up, all right, instant profit. And if you held all the way to the top here, you can see the 13 you made held the 13 all the way to the top here at 100 pips, right? Then you saw this railroad track. I mean, even right here, if you see this railroad track happening and hasn't closed below the 13, this is probably a good indication for you to get out as well, right? Because this is a reversal pattern, and you're probably gonna think it's gonna go down below and close below 13. So I probably would have gotten out like right here, but if I'd set a take profit of 100 pips, I would have reached it at this point, right? And if you're setting a 30 pip or 30 or a 50 pip TP, then you smash through it with no problems whatsoever. Okay. All right. And then we have EA. Okay. So EA, this trade here was a Type 3. Okay, one of our the only Type 3 setup that we had on Monday. But we have a Asian box setup here. Stop hunt out of the box, okay, sets the low of the day, creates the first leg right here. All right, we got to close above and then close below right here, and then close back above, okay, to form the second leg. All right, this one's a little bit harder to see, okay, so you have to watch these, but it's okay. Like even if you missed this entry, okay, so you can see the TDI is above the market baseline and above the signal line right here. Even if you waited a few candles, over here, you still could have got the entry. Right? Any one of these entry candles would have been fine, right? But here's our entry right here, and if you wrote it all the way up to the top here, this was 120 pips to the top of this move, which was just gorgeous. And if you could see, the 13 EMA was never even touched, okay? And I think this one even continued further up. But if you got any amount of take profit would have been hit at this point. And a lot of times what I'll do is if it hits a 30 pip TP or it hits a 50 pip TP, I'll just move my stop loss to that point, right? So that I'm guaranteed to get 30 pips or guaranteed to get 50 pips. If it ever comes back down, then you still have that safety there. Okay, so when you can secure your trade. Or like setting it to break even when it hits 30 pips, that's also another thing that I like to do, because sometimes it can run higher, right? And you can get more pips, or sometimes it can reverse against you and hit your stop loss. But hey, it's up to you, like how you want to manage your trade afterwards, as long as you're managing your trade, okay, the correct way. Okay, so that was our EA trade, very beautiful Type 3 setup trade. And one of the Euro pairs that we had on Monday. Now a lot of these setups, this was just on Monday. Okay, so I mean that was eight setups that we found on Monday. There were many more setups on Tuesday and Wednesday and even today, right? So you can find all you need to do is just find one or two very good setups and just make your 30 pips, and you'll be all set. Now I'm going to show you something that will kind of let you know what what I'm talking about. Just kind of get your mind around just trading 30 pips a day, okay? Because a lot of times people will show you like, oh, they made like hundreds of pips today or hundreds of pips this week, and they're showing you big pips and lots of pips. Okay, but what I want you guys to kind of try to get yourself to do is just envision yourself getting 30 pips a day consistently, okay? Because really, it's not about getting the most pips. It's really about finding quality setups, improving your accuracy and consistency, and being able to get your 30 to 50 pips every single day, okay? So now I'm going to just do this with a different example. Like these are, if you're just watching one pair, okay, let's just say you're watching one pair every day, and you can get your 30 pips on that one pair every single day. Okay, you're going to have 150 pips that week. You're going to have 600 pips for the month. And let's just say you're trading at mini lot size, right? 0.1 lot size. Because I don't know what your account sizes are, and everybody trades a different lot size. But I'm just going to do a mini lot size of 0.1 lots, right? That would be a profit of $600 a month. Okay, just watching one pair, getting 30 pips, okay, on your setups every day per month. Okay, now that's not really a lot of money, but I mean, what would an extra $600 a month do for your income? I mean, if you guys are trading, part time and just doing this as on the side for income, and you have another job, an extra $600 a month coming in. I mean, it could help pay your bills. It could help with groceries. It could help with gas. $600 a month is it's a nice size chunk of change, right? And that's only trading a mini lot and trading one setup a day for 30 pips. Okay, now if you could take it up a notch, right, and you can kind of get some consistency and maybe watch two pairs and get two setups a day, okay, then your income jumps up to $1,200 a month. Okay, and then three pairs and four pairs, your income just kind of grows, right? If you can get four setups a day, 120 pips, I mean that's $2,400 a month extra. Okay, that only took you a couple hours each day to do, right? You're only watching these pairs, these setups during London or New York Open, right? That's only a few hours, max that you have to do per day, right? So what could an extra $2,400 do for you, okay, trading at a mini lot, right, and just looking for a few setups per day at 30 pips each, right? So I always tell people that it's not about how many pips you make. It's about the quality of the trades and the setups that you take and your consistency and your accuracy in taking those trades. Because what's great about Forex and what I love about Forex is that you don't have to work harder in Forex to get more money. Okay, all you have to do is just scale up your lot size. You're doing the same amount of work, but all you have to do is scale up your lot size. Let's say you're taking half a lot trades, right? If you could up your lot size to half a lot trades, okay, and you just watch one pair a month, okay, or sorry, a day, a month, and you're getting 30 pips a day, okay, on that one pair, all right, every day for that week, you get 150 pips, 600 pips for the month. You made an extra $3,000 just working, right, quote unquote, trading a couple hours a day, every day, just waiting for that setup, right? If you could just wait for one setup every day, 30 pips, right? $3,000 extra a month. Now think about that. If you could double that, triple that, quadruple that, okay, the money gets kind of ridiculous, right? I mean, these are like, these are incomes for full-time full-time jobs, right? So I mean, if you can up your lot size, I mean, let's take it to one lot because the goal is to be able to trade one lot sizes, standard lot sizes, okay, and trade multiple pairs and then get this kind of income, okay, guys? So just watching one pair, scaling up to one lot size, $6,000 extra a month, okay, 30 pips a day, all right? So it's not about working harder. It's not about getting the most pips, okay? It's about quality setups, scaling up your lot size, and catching those setups that you know will pay out those 30 pips every day, and you can make this kind of money. Because if I can make the same amount of money in 30 pips that you make in 300, why wouldn't you do it, right? Work harder? No, I don't want to work harder. I want to work smarter, right? So that doesn't mean to go out and just start upping your lot size, guys, okay? You obviously have to trade with the appropriate amount of risk versus the account balance that you have, okay? So obviously you're going to work up to these amounts, okay? And you might start off with a mini lot. You might start off with a micro lot even, okay, 0.01 or 0.05 or whatever it is that you start out with, and whatever it is your balance is, make sure that you're trading with the appropriate lot size and the appropriate risk, okay? And that's also another video that I need to do because that's a whole video unto itself, is trading risk properly. Because a lot of times, people see that, I show these money amounts, and people get wide-eyed and they get greedy and they want to get to this point, and they start over leveraging their accounts and upping their lot sizes to crazy amounts because they want to make that money. But if you don't have the consistency yet, and if you don't have, these internalized in your head, to be able to recognize that this is going to be a 90% trade, accuracy trade, or 95% accuracy trade, you can't be doing those size lots until you're confident and you see the consistency in that first. Okay, so that's what I want you guys to think about. Wrap your mind around that, and just think about that. Work smarter, not harder. Okay, don't get caught up in getting as many pips as possible. Work on getting quality pips. Okay, work on getting your accuracy up. Work on recognizing the trade setups. Okay, so that you can work smarter, not harder. Okay, do less pips, do less work. Okay, but make more money. Okay, because that's the ultimate goal, right? I don't want to be sitting in front of charts all day, watching charts all day long, and trading these setups to get 1,000 pips, 2,000 pips. I don't want to do that. I just want to get my 30, 50 pips a day, make a few $100, a few $1,000, whatever it is, right? Eventually, that's going to be the goal, right? And then just be done with my trading day. Okay, so that's going to be the focus. All right, guys. All right, so that's going to do it for this video. I hope you guys really enjoyed it, and look forward to more videos next week. I will be doing more setups and analysis like this, and this weekend on Sunday I'll try to do something like an analysis for the outlook for the week. Okay, so I'll try to analyze some pairs for you guys and see if we can catch some setups before they happen. All right, guys. All right, so I hope you enjoyed the video. I will see you guys on the next one.